it didn't really respect this level right here. So that means if it is not respecting the level properly, it's probably because it might not be the proper level that I have on the chart. The level probably was going to be like these highs in the level right here. And if I did have that level right there, I could have taken it for a long. I was going to take a long right here, put my stop loss just right underneath that level right there, and the risk reward would have been really good. Hey guys, it's Will. Welcome to the channel. I'm a part-time day trader trying to become a full-time. We are currently in the first week of June, and I did take 2 trades this week. I'm not going to break it down on my TradeZella because it's not anything in here, because it is not my actual account, so I can't put it in my account. Because I am trading on my paper trading account. You guys can see down here, paper trading. I am testing it out for now. I am doing futures, like I said in my past couple videos. For the week, I am down. It's not the best, but I am happy with my performance. Honestly, it's refreshing. It's refreshing to just not lose so much, because I know that in the long run, with my strategy, with my risk reward, I know that it could be good in the long run. And I am going to break down the trades and then explain to you why risk reward does really matter, and this is why I should be focusing on it. This is the Micro ES, and I'm only going to chart in the Micro ES because that's where I am going to trade. I'm also trading on my trading view because it is easier. I can actually see my profits and losses. Here's a trade I did take on Tuesday, and it was actually a break-even trade, funny enough, which is crazy because I will never ever believe I'll be a break-even on a trade when I'm doing options. It doesn't make sense because the trade's always valid when the trade is like break even, but futures is different, so I'm able to like change my stop loss to break even and I won't lose. Basically, the green arrow, that's where I got in that candle, and I sold on this candle. It doesn't make sense because the trade is still valid, right? My stop loss was going to be at this high right here, which was a supply rejection that I kept rejecting the market. We can see early morning it's still rejecting a lot of times. Data came out right at this green arrow wick, so I was like, it's still rejecting, so maybe I can just try this rejection out. It was going in my favor, but my stop loss was going to be like a 2-to-1, so it was going to be like around down here or something like that. It started wicking up aggressively, and I'm like, okay, this is probably not going to work out. I'm just going to put my stop loss to break even. You're going to see it on the live trade, and I'm going to show you guys live trade first, and then I'll break down the trade. You saw that I was up like about $50, and you're probably wondering why I didn't sell. Even though the trade is in my favor, it wasn't my actual target. It wasn't a 2-to-1. And maybe before I would have sold, but it's not a proper risk reward. So I'm not going to just sell randomly just because my P&L is a little high. I'm trying to focus on my risk reward, make sure my wins are always bigger than my losers, which it is, but I want to make sure it is at least a 2-to-1 and not just lower than that. If it's not 2-to-1, then I shouldn't even take the trade at all. If I was doing options like what I normally do and I sold up right here, I would definitely not be a break even, because that's options, right? When the candles are going against you, that's when you're going to be like negative, and it doesn't even make sense. So like, why am I going to stop out randomly? And I should like stay to my target. But if I did stay to my target, I probably lost like maybe 30%. Showing you guys the 1 hour time frame now on the day I took the trade, which is the 59.56. I was deciding to do that as a supply rejection because, as you see in the previous day, this is the pre-market 59.56, 59.56 on the other day, 59.56 and 59.56. So rejected multiple times, and it isn't the bigger picture, or it isn't the bigger structure of the rejections, because the major one is at the 6,000 level right here. This was also a major rejection that I kept rejecting the market, so I was like, maybe I should just try it again, because it kept rejecting on intraday on the 2 minutes. It kept showing you guys, and also when data came out, it kept rejecting as well. So I was like, maybe I should take a shot. I know my risk reward is good, so I know that in the long run I can do good, but maybe that's also a bad thing because I'm just trying to just take shots because I know that I could have a better risk reward. There was a lot of confluences, that's why I did take the trade, and it didn't work out. So I was like, I'm just gonna move it to break even, and I was planning on taking another trade, but I didn't have enough time. I had to leave, so I just didn't even try taking a trade. Going back to the 2 minute time frame, I know that if it did break back above, I can play a retest long, and you can see how it didn't really respect this level right here. it didn't really respect this level right here. So that means if it is not respecting the level properly, it's probably because it might not be the proper level that I have on the chart. The level probably was going to be like these highs in the level right here. And if I did have that level right there, I could have taken it for a long. I was going to take a long right here, put my stop loss just right underneath that level right there, and the risk reward would have been really good. Obviously not all the way here, but it would have been like a 3-to-1 or 4-to-1. I know my setups are not always gonna be 2-to-1. I know that it could be more than 2-to-1. It could be 3-to-1, 4-to-1, but I just need to have a proper target to always hit. I know that for options, this thing right here is not gonna be a 3-to-1, 4-to-1 because this low volume thing right here is not going to be the best for options. But at this time when I was thinking about this trade, I knew that I did take a trade already and I was already about to leave. Since I was break even, I don't mind taking a trade, even though I said I'm only going to take one trade, right? But I'm break even, so I can take another trade if I want to. Going to the next day on Wednesday, and I was telling you guys earlier about the 6,000 level. This was the major level or rejection on the spot. And I did see multiple rejections intraday. And this was the short that I should have taken. But it's funny how I tried to take it like the previous day, which was this day right here, but I didn't take it today when it was showing me more rejections. Now going to the 2-minute chart in pre-market, it was rejecting at this level from earlier, and then you can see how it goes up, it rejects. I'm not going to take it there. It starts sliding up more and it's still rejecting, and I was going to take it there, but there was data, so I was trying to respect it, and the data was like right here, this big ass wick candle. I didn't get in the trade because of the data, but if I did take the shot, it would have been this risk reward. It would have been, my stop loss would have been right at the 6,000, and my reward would have been exactly at this pre-market low, which I was targeting. So it would have been a 4-to-1. My main target would have been this 59.70 right here, but I knew that I should give this pre-market low right here. Going back to Tuesday, I do want to show you guys this level right here because this is what the rejection level I was playing off of. My initial level was around 59.56, and I was trying to short this level right here, right? I was trying to short it and I didn't get it. And then later on the day, I started seeing hold this level right here, and this could have been a break and retest long, which it was exactly that level. But since it wasn't properly on my level, I was thinking that I needed to change the level. Like if I go to 5 minutes and I zoom out the previous day, I put it at 59.56 because this rejection high on the pre-market right there. But if I go zoom out further and go to the 50 minutes or the 30 minutes, you can see the exact level right here. If I did move it down here, it would align exactly at this wick high right here. You see how there's a wick high right here, and I could have changed it to there, but I didn't do it, and I also had to go, so that's why I didn't change my level. But that was a really good break and retest long that I was basically waiting for, and it didn't happen, and then decided to take a short instead. It didn't work out. It was break even, so I could have taken the trade, which I was waiting for, but I just had to leave, and I was like, I didn't want to mess up anything. I didn't want to play around with anything if I was like not going to be on my computer. Coming into Thursday now, I do want to show you guys where I got these levels from. If I zoom back from the 15 minutes, I was showing you guys the 6,000 level, which is like right here, 6,000, 6,000. But then I do see this wick high on the pre-market. There was like a data coming out, so 6,016. I don't want to just avoid a 6,000 level because it might be a major level still, because it was rejecting previous day. And then if I go up further, there was this wick high on the previous couple days ago, and I just don't know if I want to put my level at the 6,008, like 08. But it doesn't make sense if these two levels are really close to each other, and it was mainly rejecting over here, so why am I going to put it at 6,008? So sometimes it's kind of hard to find the levels. It's going to be really precise because then you never know what can really hold. My plans today, or my strategy, my game plan, was I had 3 today. My 3 game plans that I had today was 3 things. I either do a break and retest long into this high right here, or I can also do it here as well, break and retest long. Let's say that's 4 then. So this break and retest long, this break and retest long, that's 2. Or I do this break and retest short right here, or I do this pullback into this demand zone right here and take it for a long right there. So that's about 4 game plans today. I did take a short today, which was this break and retest short, and I'm going to play the live trade now, and then I'll break down the trade. So I did lose a trade. I don't know why, something was wrong with my limit order or my market order. So I had to exit TradingView. How I got this level was basically zooming out further. This level right here, the 590.70 was holding right here. It was general areas around here, and then the pre-market, it was 59.70 exactly, or around those areas. If I zoom out further 30 minutes, this is the major market structure. We see how there's a high right here. This is basically the break and retest for the longer time frame, and then I can take a long. But it didn't exactly line properly with this 59.52 that had on the level, so maybe I did get it wrong. It was obviously a little higher. You can see how there's highs right here, 59.57, 59.57. I guess that's why I didn't have the proper level. This could have been like right here, and that's why maybe I shouldn't have shorted, or if I should have respected it. But then if I did sell it out there, the risk reward wasn't proper. I'm telling you guys why I had these 4 game plans is because I want a proper break and retest. If the market just broke down straight down and it went to this demand zone right here and it kept holding, then I'll take it for a long. But since it was breaking down, it went back up, but then it started retesting this level, it rejected. Then later I was like, okay, I'm gonna take my shot. Since it's still rejecting, I'm gonna take my shot into this demand zone right here. In later day, I could have taken this trade because it broke back up, it started retesting the level, and it went back down right here. So it's hard to say that I will take this retest long right here, but the level, I guess the level really is this level right here, 59.70, 57. So I guess I'll have to change that for the next day, and then I'll have to take off this. So this will be the next level for tomorrow. But we will see. Still early in the day, it's only 10:50, but that will be my levels that I would have to change. This is the reason why I don't chase the breakouts, because you can see how it breaks up right here, and you might have your stop loss right exactly at this level, but you can see that it just falls back down aggressively, and then you just fail right there. The level was not this level right here. It's not really respecting this level anymore, and the level is this level right here. You could say this 59.70 is not really respecting anymore, but we see how it's still like held exactly right at the 59.70s. It's really hard. You gotta really understand your levels properly and understand the chart patterns really well. That is my breakdown of the week. I am down $25. We do have tomorrow, but I'll see if I take a trade. But that is it for this week. And what I'd like to say is, how you do one thing is how you do everything. Keep staying disciplined, keep staying consistent, and let's just get 1% better every day. And I'll see you in the next one.